key stakeholders in South Africa's financial sector joined together to mark the launch of a major joint national consumer campaign aimed at consumers under financial distress. That's most South Africans, I'll tell you. Joining us now is Johan de Ridder, who's the Executive Director at African Bank Limited and also spokesperson for the campaign. Thank you very much for coming through, Johan. Just tell us about this debt management campaign.
It's a campaign jointly launched by the National Credit Regulator and the banking industry, supported by the debt counselling industry in South Africa, that has emerged post the National Credit Act being enacted. And it's aimed at getting a message across to a considerable number of consumers in South Africa at this point in time that are struggling to make their debt repayments. At the moment, of about 18 million credit active consumers on the bureaus, close to 46% or 8 million of them are struggling, are actually impaired on the bureaus. And a percentage of that are presently under debt review.
All right, now this is a collaboration between the Banking Association, the National Credit Regulator, the Debt Counselling Association. How's the industry working with the consumers to try to tackle these problems?
The campaign takes the form of an invitation to consumers, consumers that are under debt distress that may not have defaulted yet, as well as those that are in default and not yet under debt review, to come in the first instance to speak to their banks, to see if the banks can give them advice and relief to get on the recovery path. There's a central call centre in the National Debt Mediation Association, which is an industry body that has been established about 2 years ago to do certain collaborative things in this space. Depending on the situation of the consumer, they will then be given advice which could include to go under debt counselling if that is the right route to go.
All right, there's also 4 major banks that are funding the campaign. Some would say, the root cause of the problem, it may be behaviour on the part of the consumer, but it's also the unbridled propensity to lend by the banks, reined in recently by the National Credit Act, but there is a sense that the banks need to change their approach. What's that change that's going to
Well, there's no doubt that the National Credit Act had that effect. We are sitting with an overhang of quite aggressive lending before the enactment of the Act, and then also compounded by the financial recession that we've gone through. That obviously is still manifesting in the market. So there is that kind of suppression also in demand for credit at this point in time. And yes, the Act and the protections in the Act, plus the responsibilities for responsible borrowing and lending that came with the Act, is starting to remedy those kind of factors.
And then beyond the campaign, there is just a general need to get South Africans to change their behaviour. We're told that for most South Africans, about 70% of their income goes towards debt. That's the extent to which we're indebted on average in South Africa. How do we change this mentality of buying everything on credit?
Yeah, there is a low propensity to save in South Africa, that's well known. And yes, there is definitely a very heavy appetite for credit. How we change that is a bigger question than what this campaign is trying to do. But hopefully in the process of a more empathetic approach to people, for instance, that came under debt distress due to circumstances outside their control, reduced income and those kind of employment loss and so on, that they learn in this process to, in future, when they re-engage in the credit market, be much more cautious in terms of over-indebting themselves.
We also know that the banking industry can be quite punitive. For instance, if you default once or twice, you get sent to a credit bureau. And I guess what consumers are looking for post-recession, because many have lost their jobs, is some kind of a concession, some kind of a midpoint. Debt counselling helps you service the debt. But for those who are heavily indebted and won't be in a position to service a percentage of that debt, are there any concessions? Does this campaign encourage banks also to show a compassionate side?
Yeah, the campaign is part of a broader strategy. There's been a task team established by the National Credit Regulator last year, about October, to look at why the debt counselling process is not giving adequate relief to adequate numbers of customers. The task team came up with conclusions as to what's causing it, plus a range of recommendations that are now supported by both the industry and the debt counselling fraternity and the National Credit Regulator to improve the process and to result in more cases actually getting real relief and getting on the path to rehabilitation. That includes, for instance, a set of the debt restructuring rules that the industry has agreed and are being deployed on a central platform that is being funded by the industry at the moment, where debt portfolios of consumers can be restructured, involving concessions in terms of term extension as well as concessions on finance rates, to allow the affordability of the consumer to better match the obligations for a period, but with the aim to get them to rehabilitate and eventually settle all their debts.
All right, could we just bring into this conversation, the Reserve Bank will be making a decision on interest rates, and it was hoped that by cutting interest rates by over 500 basis points over the last year, that it would have created a stimulus in terms of spending but also debt servicing, and it doesn't seem to have done either.
Look, I think if you look at debt repayments right at the moment, and you look at just servicing the capital portion of the debt, so you're not necessarily trying to repay the overhang of the fact that inflation was actually up at like 10-11%, only about a year and a half to 2 years ago. That I think is happening pretty well. The problem that you face in South Africa is that we buy inflation in South Africa. We don't create it necessarily ourselves. Well, let me put that in a slightly different way. We're net importers of oil in this country. We're not price setters when it comes to oil. We literally just buy it. So regardless of what the price is, that'll drive inflation. So literally most of our inflation comes from across our borders because we import literally everything in this economy. And that means our inflation, when it runs cool, can run like it does now at 4.8%. But it can also run at 11%, and that just plays complete havoc with the debt cycle and complete havoc with people's own debt burdens. And people should take this into consideration. I fully support, I think, what's happening over here, and I think it's very, very important.
Now, this is bigger than the campaign, as Johan is at pains to stress, that some of these questions are bigger than what this campaign can do. But in terms of changing the credit cycle in the country to prompt investment, to prompt debt servicing, to prompt savings, what can be done?
And I suppose the bad news is if you look at the Americans, for instance, where there's a very high level of education as far as investments are concerned, what savings can do and so on. It's the bling lifestyle that wins over and above that. The fact that you can buy a new car, the flat screen TV and everything, that becomes slightly more important than actually savings. The problem that you sit with in South Africa is that the social ills that we have in this economy, we don't necessarily have this network or this net that'll catch people when they become unemployed, or alternatively when they start retiring and so on, which do exist in the developed world at the moment. We'll see for how long though, but it does exist in the developed world. And that's why savings is just so critically important in South Africa.
Johan, just back to this big question beyond the campaign,
yeah.
What could be taken as first steps by the banking industry to try to promote savings in the country? Just products, for instance, that would be attractive to the consumer to say, yeah, let me put away my money and I'm comfortable with that.
It is products, it's confidence in that, and it's also a change in culture in South Africa, which is a very, has developed an increased propensity to live on credit. With obviously aggressive credit extension. The total consumer book in South Africa from 2002 to now grew from 360 billion to 1.4 trillion. So there's been very aggressive growth in the extension of credit to consumers. I think that the learning curve that we've gone through with this recession hopefully has changed lending behavior and borrowing behavior, and provided we can help people now to rehabilitate through the kind of interventions we're talking now, hopefully they'll be more responsible borrowers when they come out of it.
All right, beyond the campaign also, Johan, is this big challenge that we're in the so-called developmental state where you've got an emerging middle class, many more people coming into the mainstream economy, many so-called unbanked in South Africa, and for all of these people entering the credit cycle for the first time, these risks may prevail going into the future. What's being done by the banking industry to ensure that for those coming into the system for the first time, the previously unbanked, the micro lenders, that they're acting in a way that's a little bit more scrupulous and protective of in terms of upholding risk management practices and in terms of encouraging people not to borrow excessively?
Well, I think the indications in low credit extension growth, despite strong incentive in terms of the reduction in the repo rate by the Reserve Bank, etc., indicate that lending behavior has become much more risk averse. And obviously the experience with over-indebtedness that we have, the high impairment rate on the bureaus, is influencing that. So there already has been changes in conduct, further enhanced by the fact that the National Credit Act imposes heavy penalties on people who lend recklessly, like also borrowers borrowing recklessly. So hopefully over time we'll see very good benefits coming out of the Act. But the Act is new, a lot of interpretational issues. We haven't yet seen the full effect of the Act in the credit economy.